Here's a question that always gets people's attention. What's the one thing that has been trusted for centuries as a store of value, survives inflation, survives recessions, and even outlasts global crises? The answer, of course, is gold. Whether you're in New York, London, or Karachi, gold prices are watched closely by investors, jewelers, and ordinary families alike. And right now, all eyes are on the stability of gold in Pakistan's market, where the price has held steady at a record high level. But what does that stability really mean? Is it a sign of strength, a pause before the next surge, or a warning of volatility to come? Today, we're breaking down the details of gold's performance, the factors influencing it, and why it matters not just locally, but globally. Globally, gold's appeal has been steady in recent years, especially as investors face uncertainty in stock markets and questions about global economic growth. With central banks in major economies adjusting interest rates and inflation running hot in many parts of the world, gold continues to shine as a safe haven asset. For Pakistan, this global backdrop is critical. Local gold prices don't move in isolation. They're connected to everything from Federal Reserve decisions in the United States to oil prices in the Middle East. The interconnectedness of the gold market is one reason why stability in Pakistan can't be looked at without considering the bigger global picture. One interesting angle is how digital and paper gold are changing the market. Globally, exchange-traded funds, ETFs, backed by gold allow investors to buy exposure to the metal without physically holding it. But in Pakistan, physical gold remains dominant. Families often prefer actual jewelry or coins over financial products. This difference highlights how cultural habits shape markets. Stability in prices, therefore, doesn't just influence investors. It affects weddings, gifts, and traditions across the country. A bride's dowry, for example, can become more expensive when prices rise, so families often watch gold rates closely. For many observers, the question now is simple. Will gold in Pakistan climb higher, or is a correction coming? Analysts suggest that the answer depends on a few key signals. If global economic uncertainty continues, gold could rise further. If the US dollar strengthens, it might hold back gains. Locally, if the rupee weakens again, prices could spike regardless of what happens internationally. The current stability might just be the calm before the storm. But predicting gold prices is notoriously difficult. What's clear, however, is that people will keep watching closely, because these numbers impact not just traders, but everyday households. At the end of the day, the story of gold in Pakistan is about more than numbers on a screen. It's about how global markets, local economies, and cultural traditions all intersect in the price of one metal. The stability at 359,800 Tola may seem like a small detail, but it represents a much larger story about trust, uncertainty, and value. Whether you see gold as an investment, a cultural treasure, or simply a shiny metal, its role in shaping economies and lives is undeniable. As the market watches what comes next, one thing is certain: gold will continue to glitter at the center of financial and cultural conversations worldwide. On Monday, gold prices in Pakistan remained unchanged, holding firm at 359,800 per Tola. For those unfamiliar, a Tola is a traditional South Asian unit of measurement for gold, equivalent to about 11.66 grams. In addition to the per Tola rate, the price for 10 grams of gold also stayed steady at 308,470, according to figures released by the All Pakistan Gems and Jewelry Sarafa Association, often referred to as APGJSA. This consistency comes after Saturday's surge, when gold jumped by $4,100 per Tola in a single day, pushing it to the current level. For investors and consumers, this sudden rise, followed by stability, signals a market that's worth paying close attention to. Gold's stability after such a sharp increase raises some key questions. Why did the price spike so suddenly, and what made it level off afterward? Analysts often point to a mix of international and domestic factors. Globally, gold is heavily influenced by the value of the US dollar, international interest rates, and geopolitical events. Locally, in Pakistan, it's also tied to currency fluctuations and demand in the jewelry market. A jump like the one seen on Saturday could reflect global uncertainty, with investors rushing to gold as a safe haven. The fact that it stabilized afterward might mean the market is catching its breath before deciding the next direction. To understand this better, it helps to remember how gold functions in global markets. Unlike stocks or bonds, gold doesn't pay dividends or interest. Instead, its value comes from scarcity, tradition, and trust. When economies face turbulence, whether from inflation, wars, or financial instability, people often flock to gold. It's seen as a hedge, something that holds value when other assets are shaky. In Pakistan, where inflation and currency fluctuations are frequent, gold plays an even bigger role for households. Families often save in gold jewelry, not just for cultural reasons, but because it's viewed as a reliable way to preserve wealth. But why does Pakistan's gold market make global headlines? One reason is that it often reflects larger regional trends in South Asia. Pakistan, like India, has a strong cultural and financial relationship with gold. Demand spikes around wedding seasons, religious festivals, and times of economic uncertainty. When local prices hold steady at such a high level, it suggests that both buyers and sellers are waiting for cues from international markets before making big moves. This wait-and-see period can be crucial because stability sometimes precedes either a correction downward or another surge upward. Another factor to consider is the link between gold and the US dollar. Internationally, gold is priced in dollars. When the dollar strengthens, gold often weakens because it becomes more expensive for buyers using other currencies. On the flip side, when the dollar falls, gold usually rises. In Pakistan, this effect is amplified by the local exchange rate. If the Pakistani rupee loses value against the dollar, gold prices in rupee terms can climb quickly, even if the global price remains unchanged. This layered effect means that Pakistani consumers often feel gold price fluctuations more sharply than people in countries with stronger or more stable currencies. Let's not forget the role of inflation. Inflation erodes the value of paper money, but gold often holds its value. That's why investors around the world turn to it during inflationary periods. In Pakistan, inflation has been a persistent challenge, with rising costs of food, fuel, and everyday goods. When inflation is high, gold becomes not just a luxury purchase, but a financial strategy for many families. The stability at Rs 359,800 rupees per Tola may reflect the balance between inflation pressures and the limits of what consumers are currently willing to pay. Another dimension of this story is the difference between local and international gold prices. Sometimes domestic markets diverge from global trends due to supply and demand factors within the country. For instance, import restrictions, taxes, and local buying habits can cause gold in Pakistan to trade at a premium compared to the international price. The APGJSA plays a role in standardizing and reporting these rates, but ultimately, local conditions can drive unique pricing behavior. This means that while global markets may move one way, Pakistan's prices don't always follow in lockstep. It's also important to look at the role of jewelers and traders. Gold isn't just an investment in Pakistan. It's part of daily business for thousands of shops across the country. From small-town jewelers to large urban markets, the stability of gold prices directly affects livelihoods. A sharp rise, like the one seen on Saturday, can slow sales because customers hesitate to buy at higher levels. Stability, on the other hand, gives both buyers and sellers more confidence to continue transactions. This makes the current steady rate significant. It provides a breathing space for the market.